At the end of October, Huobi launched a long-awaited product, USDT-margined swaps. This product is quoted in USDT and used USDT to calculate profit and loss. It has a linear payoff and has no delivery date. Therefore, users could hold positions as long as they want if no liquidation occurs. In addition to gaining profits in a rising or falling market by opening a long or short position, users could use it for hedging. So today we have three very good guests to discuss about USDT margin swaps from all over the world. Hello everyone, welcome to Huobi Insider.
I'm Mike from Rossum. I run a company called Folkvang. Right now I'm here in Hong Kong and we do a lot of crypto trading, a lot of HFT. And we're very active in on Huobi as well as on some other exchanges. We have been trading for a long time now. We started originally on Mt. Gox. And throughout the years we've progressed and we've enhanced and as the crypto space is growing, we are expanding as well. Yeah, I'm really excited for the new USDT swaps from Huobi.
Hi, I'm Michael. I'm managing partner of Dexterity Capital. We are an algorithmic market neutral trading fund. We've been trading crypto 24/7 for about 2.5 years now. And I am London based.
Hi, everyone. I'm Siddharth Garg from India. I'm the founder of Longchain Capital, and we specialize in market making cryptocurrency derivatives. I've been trading cryptocurrencies for last 2 years. And before that, I used to trade traditional commodities and equities markets.
Hi everyone, I'm Sierra San, Head of Global Markets, Vice President at Huobi Group. I'm really glad to welcome everyone here to our Huobi Insider. And today we're going to talk about USDT margin swaps. Derivatives trading have opened new doors on the trading of things like Bitcoin and other popular digital assets. But it has also opened an entirely new box of futures trading. So comparing USDT margin swaps with coin margin swaps, which one is more catered to the current market needs?
Thank you, Sarah, for having me here. So I would say the good thing about USDT margin swaps is you have to take a view only on USDT from the investment point of view, and then you take trading view on different swaps. Now let's look at an example. YFI, which has had very high volatility recently, the volatility makes it a very good trading vehicle, but it doesn't make it probably a very good investment vehicle. So having something like a USDT margin swap on YFI allows you to trade it without necessarily exposing yourself to the investment risk of investing in YFI. Similarly, you have a lot of traders in the world who do not necessarily believe in cryptocurrencies, but they want to trade cryptocurrencies because of the kind of volatility you have there. So these are the kind of traders who can definitely benefit from USDT margin swaps. Also, looking at the number of swaps available right now, I think USDT swaps make a lot more sense right now compared to, say, coin margin swaps, especially for currencies, especially for something like DeFi instruments.
Yeah, hi, Mike. Thanks a lot for inviting me too. I quickly want to add on to that. So those are great answers. I very much agree. On top of that, it's also very easy to get in and out of different swaps. If all your collateral is just Tether, it's very easy to move it around. So you might have some trading capital, and if you're trading a Bitcoin swap and you want to switch to something else, so for example, there's a new DeFi coin like we've seen a lot recently. Like literally, the only thing you need to do to get started is just move that Tether that you already hold into another wallet. And yeah, you don't actually have to deal with the risk as Sid pointed out, but also the fact of actually converting everything constantly. If you're trading multiple things at the same time and you need to manage your risk, it's very easy if the only collateral you have is Tether, and you can very swiftly move that around as you see fit, especially in these very volatile DeFi coins that we have seen. On top of that, what we have also noticed is that the space is getting more professional. And you see a lot of people from traditional finance getting into crypto. And traditionally speaking, like most professionals, they think more in dollars. So they're a lot more like, for example, because all their operating costs are in dollars. Many traditional investors think in terms of dollar yields and dollar profit. So as such, having all the collateral in dollars is a whole lot easier. Whereas in the old system, if you look at a few years ago, it was really popular in crypto, is that people had Bitcoin and they just wanted to get more Bitcoin. And they would also trade other swaps. with the sole purpose of accumulating more Bitcoin. And as a cultural thing, you kind of see that disappearing a little bit. Like that's not as popular as it used to be. So in the current meta and what current people value, including the new professionals, it's a lot more Tether stuff. Yeah, and definitely the DeFi craze we've seen. Like I 100% agree with Sid there. Like it's so much easier with all the coins coming out really quickly, and it's very hard to get to even get the collateral. Like we saw with Filecoin, for example. Filecoin is very interesting because it was very hard to get Filecoin when it just came out, because there was a big demand from borrowers, a big demand from miners as well, who needed it for staking. Such as spot markets were really expensive, so to say. And having access to USDT-based swaps makes a lot of sense.
So definitely, I would agree that, given the traditional players from the financial industry are coming into the market right now, and some data from Huobi is that we see institutional trading volume grow so much this year. From the beginning of 2019, where we started institutional trading, institutional business unit, we only had 17% trading volume that's made of institutional traders. But now we see on the spot market, we have about 50% trading volume that's from institutional players, and on the perpetual swaps we have about 55%, and on futures trading we have about 55% also from institutional players. So that's a huge change of just customer structure compare where we were in 2017 and now. It just we see so many traditional financial players and professional traders are coming into the market, and that's making this whole industry bigger and so much bigger. And the bull market we're having right now, we see like a strong support from all of these traditional players, and we definitely believe that USDT margin swaps is a great product, and it's tailored for institutional players. And we've been hearing from our community, from our existing institutional players that that's a product they really wanted, and also agreed on the the whole DeFi craze. From about June, where we see the whole DeFi market just took off, and the total value locked go from like a very small amount to almost like 11 billion US dollar amount of the whole total value locked. So we see so many people they wanted to get into DeFi, but they don't know how to, and they wanted to trade those coins, and we at Huobi offered this hub for listing those coins, and at the same time we offer swaps for them to trade. It just some other voices that we've been hearing from the community. So given that, my next question is, so based on the data from Crypto Compare, derivatives trading volume decreased in September about 17.5% to about 634 billion US dollars. So do you think the launch of USDT margin swaps in October could bring a new bunch of trading volume to reignite the derivatives market?
Hey, thank you so much for having us today, Ciara. So yeah, there was definitely a significant decline in September, but I think it was largely due to the success of DeFi, which really blew up over the summer. And I know a number of traders who reallocated away from what they were doing normally to kind of do yield farming or make kind of a good return in DeFi. That being said, I think for the reasons that Siddharth and Mike said about how these products work. I think it will definitely translate to more volume having tether margin swaps available to us. As they said, one of the biggest problems for us is locates. During the summer, we really wanted to trade a lot of these DeFi coins, and we just couldn't get them. We're a market neutral fund. Dexterity is a market neutral fund. So we couldn't buy the coins because we don't take exposure to things. And if I want to go borrow it, there was very limited availability of these coins, and the interest rates were egregious. And so, whenever we think about a strategy, there's some ROI we make and there's an interest rate we pay. And if the differential between those two numbers is not big enough, we don't run the strategy. So not being able to get these locates or not being able to borrow these coins, we just didn't run a bunch of strategies we really wanted to. With Huobi bringing on tether margin swaps, that opens doors for us. That means there are strategies we weren't running a few months ago that we can run now. And that's definitely going to translate to more volume for Huobi, and I think for the entire ecosystem. And I think, you know, Huobi is not the first to offer margined tether margin swaps, but by adding that in, there are now more venues who have that. And that gives us more chances to run market making strategies and stat arb strategies across exchanges, which will, again, definitely increase volume for Dexterity and the ecosystem.
Yeah, I mean, like there are other players in the market which have become pretty big in USDT margin swaps, and Huobi is definitely not the first one. But someone who didn't have the capabilities to say trade on those platforms would definitely not be able to trade USDT margin swaps. And as we discussed earlier, there are a lot of traditional traders for whom USDT margin swaps might make a lot more sense than coin-based swaps. So they could not, if they could not go to say on these other platforms, but they were already there on Huobi. Now this opens another avenue for them to trade. And definitely, like given the kind of scenario you have right now, USDT margin swaps make a lot of sense than a lot more sense than say coin margin swaps, and that is effectively going to most likely increase the size of the market overall. Plus, I'm pretty sure Huobi is going to eat into the pie, the USDT margin pie of other players, because Huobi itself is such a big player in the market right now.
Thank you so much, and great to hear that. It's definitely you know, consistent with the voices that we've been hearing from our other customers and users. So first thing that we hear from Michael, you know, to offer this USDT margin swaps would really complete our set of derivatives products, so that you can move around, you can trade across different exchanges, and also be able to hold those positions on one single exchange. With our launch of the options and perpetual swaps, coin-based and also USDT-based, we now have a full set of the derivatives trading products, and it's all about, you know, building this whole ecosystem for our clients and constantly improving our products. And my next question, USDT margin swaps can be used in conjunctions with other trading methods and strategies. They can also be effective in profit taking as long as the right goals are set. So in addition to gaining profits in a rising or falling market by opening a long or short position, users could also use it for hedging. Since there are many strategies involved in derivatives trading, could you recommend one or two strategies you would prefer in USDT margin swaps trading?
If I look at our own trading that we do here at Folkvang, it's pretty sophisticated, and we take a very quantitative approach to things. So we do a lot of arbitrage and a lot of market making. I think it's similar to Michael as well. And that said, so those are, we have a lot of strategies that we do already employ on coin margins swaps, but it's a lot easier to run them on USDT swaps, particularly when it comes to managing the collateral. So we can pour those over, so to say, but specifically for USDT margin swaps, what we really see is we're just able to trade everything automatically without having to do any type of, we don't have to worry about the collateral. So if you look at our strategies on the USDT swaps on the Huobi, for example, like we can just run all the markets automatically without having to worry about anything, which is very different from the coin margin swap for the problems that Michael described earlier. Where we also have to source the collateral, we have to borrow. It's very the interest can be very expensive for some DeFi coins, so we can just do a lot more that way. And the same goes for like strategies you would recommend to like maybe like day traders or such. We think scalping is very interesting, where usually scalpers. So scalping is that you try to predict very short-term moves. If you see the market moving in a specific direction. And usually scalpers, they focus on like one or two coins that they know and that they like. So for example, Bitcoin and ETH. And these are also coins that they don't mind holding in case it goes down. But by using USDT swaps, you're able to effectively start scalping whichever market is attractive from a scalper's perspective, from a trading perspective, without having to worry about the collateral at all. So you can just focus on the chart. You can just focus on the patterns that you see there, and yeah, you can completely you don't have to worry about the longevity of you know the project, which is definitely a problem in the DeFi space. in terms of the rug pulls and some problems there. And just having your things in Tether, having your money safe in Tether just makes so much more sense. So just I'd say there are not many strategies that we specifically now only can do. It makes all the strategies we do just a whole lot easier, so to say.
Thanks, Mike. I think you nailed like most of the points here. You know, borrowing is hard, inventory is hard, and it doesn't necessarily change the strategies you can run. You can still run at a very high level, market making, triangles, arbitrage, whatever. I think what really changes for us is that portfolio management becomes a lot easier. And I'll compare it to, you know, a Quanto. And when I say Quanto, I mean something like an ETH perpetual that's margined in BTC. The problem with doing a Quanto is that, you know, if the BTC price drops quickly and ETH, let's say, stays flat, I suddenly have a lot less margin backing my ETH position. And that can be really dangerous because it could expose us to a potential liquidation. And we kind of have to do some acrobatics and rebalancing to make sure we don't get burned on Quantos. So, you know, the great thing about Tether is, you know what your margin value is. Tether is worth $1 pretty much all the time. So you really can do a lot there. And I think also for, you know, high volume firms like Dexterity, kind of Tether is an interesting thing because it's not always exactly $1. You know, it can vary a few bips and it can get actually quite out of whack. We've seen things as high as 20 to 40 bips off $1. That actually can create opportunities for funds like us when we're comparing that against products that are margined in coin or even in dollar. So there's a lot of interesting stuff about Tether that is kind of, you know, makes it complex and easier at the same time. And that creates opportunities for alpha.
Very interesting point. And we do see a lot of different strategies working around trading USDT margined perpetual swaps. So my next question is, as we know, both USDT margin swaps and coin margin swaps can be used for going short. So could you briefly explain the reason why USDT margin swaps could lower the risk of liquidation when going short?
So I think Michael touched upon this earlier a little bit already, but the basic risk is that if you have a position in a coin margin swap, so if you're trading a Bitcoin swap, in a coin margin swap, that means that you collateralize your position in Bitcoin. So you have some Bitcoin in there, and you use that as collateral. If Bitcoin then goes down, if the price goes down and you already have a short position, then you slowly start losing money. So you start losing your collateral. So you start slowly have less and less Bitcoin. But on top of that, the Bitcoin also becomes worth less because Bitcoin is decreasing in price. So you kind of have a double risk there, so to say. And this can be very tricky because it's not really that obvious if you're trading it like that. But this is specifically tricky because the position sizing that you do in coin margin swaps are actually in dollars. So you might, for example, if Bitcoin is $10,000, you might put a 10 Bitcoin in a coin margin account. And you might open a short of a specific size. If it then all comes crashing down, then the 10 Bitcoin is not worth the same amount anymore. So if Bitcoin was 10,000 in the beginning, you used to have $100,000 collateral. Bitcoin crashes, like that slowly evaporates. And we've seen that gone bad in March, where March there was a very big sell-off, very big crisis. And I think this is definitely our understanding of most of the events. Like a lot of the crash was made worse by very, very bad liquidations in coin margin swaps. And we saw this on all kinds of exchanges. But that was definitely, that caused a lot of the big sell-off. And you don't have that problem as much, or you don't have it at all on USDT swaps. For as long as Tether stays stable to $1, which it, as Michael says, basically always kind of does, you do not have that risk.
So Mike pretty much touched upon all the points. But if you look at it's quite a complicated question to answer. And if you look at different scenarios, what you can come up with is it's generally profitable to trade with USDT margin swaps when the market is going down, but when the market is going up, it's generally more profitable to trade with coin margin swaps. But USDT margin swaps definitely decreases the risk immensely when the market is going down. You can do a small thought experiment here. Suppose you're trading Bitcoin swaps using Bitcoin as a margin, and you go short in Bitcoin. Now Bitcoin also starts falling, say it goes to 0. So in the end, you will make a lot of Bitcoins, but their value will be 0. So you will in the end you will end up making nothing in that case. So yeah, I'm like, so to take care of these kind of scenarios, I think USDT swap margins are much better to short rather than coin margin swaps.
Thank you guys. Okay, so my next question is pretty interesting. The total market cap for stablecoins has grown from 2.6 billion at the start of 2019 to late September. We see it's already $20 billion. So Tether at 16 billion leads the way, and then USDC is second at 2.5 billion, and then like TUSD is about 500 million market cap. And as we all know, USDT margin swap is quoted USDT and use USDT to calculate P&L. So how will you predict the future market of USDT margin swaps based on the fact that the stablecoin market cap increased by $100 million every single day since mid-July?
I think we have pretty much touched upon some of the points earlier as well. There would hardly be any traders who would look at USDT as an investment vehicle unless they come from, say, Venezuela or Lebanon with very high fiat volatility. So we can pretty much agree that USDT is a trading instrument rather than an investment instrument. So the very increase in market cap of USDT implies that interest in trading cryptocurrencies is increasing phenomenally. And a part of this interest is bound to go into USDT margin swaps because of the kind of leverage offered by exchanges. So say I want to take an exposure in Bitcoin, I would probably take it using a leveraged USDT margin swap rather than say buying Bitcoin tokens itself. Yeah.
Yeah, I do think the rapid growth of stablecoins, especially Tether, has been astonishing this year. And there's a lot of factors for the growth. But I think the one I'll focus in on for this conversation is that it indicates there's a lot of traders out there who see an opportunity for alpha in the crypto markets, but don't want to bear exposure to the crypto itself. They don't want to hold the BTC or the altcoins because they're super volatile. You know, and as a kind of a single move in Bitcoin or any given coin can just wipe out your P&L if that's what you're kind of basing your portfolio out of. So, you know, being able to use Tether to hit these swaps, that opens doors for institutions that just wouldn't touch crypto before. They can feel a lot safer that their margin is going to be the same value at all times. And they don't have to explain to their investors that, hey, we're holding a bunch of Bitcoin or something like that. They can just be dollar-based, which is what the traditional world is based on. So that just gives, you know, more opportunity to generate more alpha for more people. And that's really good. And I think that's going to be a lot of growth there's going to be a lot of growth for Huobi and for others as they offer more of these Tether products.
So Huobi launched USDT quoted options on September 1st this year. And as we know, those options and swaps can be used for hedging and getting profits. So we would like to hear you guys to compare the main differences between options and swaps, and which one do you think you would recommend it's easier for a newbie to begin with?
Yeah, so we think options are very interesting products. However, they're also a lot more complicated. So the pricing of options is very hard. You're dealing with more metrics. You're dealing with implied volatility. You're dealing with the Greeks. So as such, we have, even if you look outside of crypto, we don't see a lot of big traction in options, aside from a few regulatory reasons. For example, if you look at Robinhood in the US, for example, like aside from a few exceptions there, like we don't ever see much traction for newcomers to trading in general to start with options, because generally speaking, swaps are just easier to understand. Whereas in like if the price goes up a certain amount, and then that's exactly how much you make if you put on that position. So if you long one Bitcoin, which is very easy with the Tether swap, you move some Tethers into an account, you long exactly one Bitcoin, and if Bitcoin goes up $100, you make $100. So they're a lot more approachable and understandable that way. Whereas with options, pricing them, figuring out when is an option overpriced, when is it not, it becomes very hard. Like for a little bit more complicated traders, they open a lot of doors as well. Like there are a lot of really exotic strategies you can employ using options, or very you can have to set up like a pretty complicated hedging strategies as well. But I would definitely not recommend those for beginners, so to say. The swaps are just they're exactly like if I have to think about how can I structure something that's the most intuitive for someone who probably doesn't have enough trading experience, it's by far swaps, and then probably also USDT swaps, because the coin margined ones are inverse, and that also comes with kind of tricks. So by far swaps, yeah.
Yeah, I think to add to what Mike said, and in terms of differences, the thing about options is that they have complex nonlinear payoffs and fixed expiry dates. So depending on what strategies you're running, it's actually really easy to get burned on options, and we've seen some trading firms go under due to failed option strategies. Swaps, on the other hand, are Delta One products that offer substantial leverage, and they never expire or settle. So you don't have quite the same limitations you do with options. In a sense, swaps are a lot like highly leveraged spot markets with, of course, the additional complexity of funding rates. But it's just like a big leveraged spot market in a sense. As Mike said, if Bitcoin goes up $100 and it's margined in Tether, you make $100. That's great. So it's simple. It's easier to understand than options. And then beyond that, the options market just isn't really as mature as a swaps market is yet. Swaps have been around longer. There's big firms and firms like us who are trading there and ensuring those markets are efficient. The options market is probably dominated by a smaller number of large players who have a big balance sheet that can protect their positions. And so for a retail investor, or for a newbie, as you put it, I think swaps are more predictable and they're less likely to catch you in an edge case and get you liquidated than options might.
Yeah, I would really agree. So, from Huobi side, after we launched the options, we can see customer structure is really different. It's more for institutions, more for professional traders, and it's takes us a bit time and more efforts to educate the market about how option works and how do you trade it. And there are lots of questions we've been receiving from the communities, but as one of the leading and trustworthy exchange in the world, we'll definitely keep doing customer education and teach people about options and different products. So that's all of my questions. Thank you so much. Bye, everyone.
Bye. Thanks.
Bye.
Bye-bye.
Okay, so we've received questions from audience, and we've collected a few of them, and I would like to answer them in this episode. The first question is, Huobi Futures has achieved significance since the launch of coin margin swaps in March this year. So we're curious about why Huobi introduces USDT margin swaps at this time, and what is the strategic position in all derivatives products of Huobi? Okay, good question. So there are many reasons for introducing USDT margin swap at this time. So after the plummet on March 12th this year, almost all cryptocurrency experienced a long-scale slump on the shorting sentiment with high across the market. Though users could open short in coin margin swaps, they still have to bear the loss from falling token price. So however, using stablecoin Tether, an asset that has price stability characteristics as margin and calculate the profit and loss, and this problem could be avoided. So to satisfy the needs of traders and to follow the market trend, we launched USDT margin swaps. On Huobi, investors can trade various swaps with only USDT as to avoid the best time delay and the hassle of managing multiple tokens. And when talking about the strategic position, I'd like to say that each of them, coin margin futures, swaps, and Tether margin swaps and USDT quoted options have their advantages. And coin margin futures have, 4 expirations. Therefore, traders could combine their holdings with expected price to diverse their trading strategies, which are very suitable for miners and hedging users. And while coin margin swaps has no expiration date, meaning users could hold them as long as they want. And for options trading, option buyers could earn profit at very low cost and have no risk of liquidation at all. And all of these products and good words of mouth from our users make what we are today. So therefore, we'll continue to upgrade and enrich our functions for these products in the follow-up work. So the next question is, liquidity is a key metric for professional traders. To what extent does Huobi hope to achieve in terms of trading volume and liquidity of USDT margin swaps? What has Huobi done to attract individual and institutional traders and to make its trading space more akin to a professional ecosystem? Okay, so indeed, before the launch of USDT margin swaps, we're not that competitive in terms of product variety, especially when USDT margin derivatives are highly demanded. So nonetheless, with its excellent liquidity and risk control capabilities, Huobi Futures has ranked first in the total trading volume for 3 consecutive quarters this year. And we certainly hope that we can maintain this goal to provide more benefits for Huobi traders. The USDT margin swaps is designed by the original team of Huobi Futures, whose core members were all from top investment banks, especially in the risk control teams. I'll briefly introduce its main advantages here, and I believe the individual and institutional traders will be attracted due to the following 3 points. So first is low par value. So take BTC swaps as an example. The face value of each BTC to USDT swap is 0.001 BTC, which is around 12 USDT. While for BTC USD swaps, the face value of each contract is 100 USD. And second is low transaction fee. We'll continue to execute our VIP sharing program and market maker preferential policies. And during this promotion period, the lowest transaction fee rate for maker is negative 0.025%, and for taker is 0.026%, which is the lowest in the market so far. And thirdly is diversified functions like switchable leverage when holding positions follow a maker and taker available. So besides, we are the first in the industry that use a locked margin optimization function. Users could hold both long and short positions for the same asset, could enjoy a position margin reduction and therefore lower liquidation risks. Last question is, according to the data from CoinMarketCap, the total market cap of Tether increased from 9.2 billion in July 15 to more than 13.7 billion as of September 4, a jump of almost 50%. USDT's trading volume has surged roughly 150% in Q3. Do you think that Huobi's launch of USDT margin swaps is a good time to increase its share in the derivatives market? What is Huobi's trump card when facing other platforms who have launched USDT margin swaps earlier than Huobi? We could see from data that it's the right time to take advantage of the ever-growing stablecoin market through launching USDT margin swaps, and it will sure increase our share in the derivatives market in turn. So though there are USDT margin swaps launched in the market already, and some of them, like the one from Binance, have gained certain market shares, we still have great confidence in our product, either from the product itself or the risk control aspect. So apart from the advantages we mentioned in the last question, we also have various methods to protect our users' assets. So such as cold and hot wallet separations, multiple signatures, and anti-DDoS protection systems, which makes us host a zero record clawback since the launch of December of 2018 for Huobi Futures. And the platform itself, we've been operating for more than 7 years, and there's zero security breach at Huobi. So when talking about the liquidation issue that traders most pay attention to, I like to say that we are the first digital asset derivative exchange in the industry that supports a 3-phase liquidation protection mechanism, and no transaction fees will be charged in partial liquidation. And moreover, we use EMA as a second reference for forced liquidation. So compared with other similar products on the derivatives market, we never reduce the positions of profitable users, and we promise never to trigger the clawback mechanism as long as the insurance fund is positive. Okay, thanks for watching. Join us next time on Huobi Insider.